What's good, YouTube? Welcome back to another breakdown, and let's get right into it. So first, we need to identify the direction of the market. Are we in a bullish market or a bearish market? You can clearly see prices making higher highs, higher lows, higher highs, higher highs, and possible higher low to continue the structure to the upside. After we identify the direction, we are now going to spot our impulse. You can clearly see this is our impulse right here. The rule to the impulse is it needs to be all one color. Our retracement need at least 2 daily candles, and all the candles of the retracements also needs to be all one color. Next, we look for if the impulse has broken and closed above the highest point of the previous structure. If I was to mark out the highest point of the previous structure, that will be this wick right here. And you can clearly see our impulse has broken and closed above the highest point. After we identify our setup on the daily, we go to the weekly time frame. On the weekly, we want to identify our support or resistance that could be of influence. This is going to be my support level. If I look to my left, you can see it was here support, support, resistance, resistance. Price broke above, used it as support. Right here, it was used as support again. Price broke below. Normally, you can expect this level to be used as resistance, but what ended up happening is that price broke above and is now using it as support to continue the momentum to the upside. After we identify our level on the weekly, we go back to the daily. On the daily, I will draw my fib from the end of the retracement to the beginning. This is because we expect this new impulse that is formed to at least travel to the negative 27 before having its retracement and a continuation. On the 4 hour, we are going to wait for our break and close above this 61 level. Once we have the break and close above, we can now place our entry on the 61, stop loss on the 88, and or take profit on the negative 27. But if you look closely, you can see the end, so the structural low of this push is all the way down here. If I want to be protected by this low right here, because after price has its impulse that broke and closed above the 61 level, it still can have its retracement all the way down here before continuing to the upside. So I am going to adjust my stop loss, put it right here on the 100 level below the close of this structural low, and my entry I'm going to pull down to get at least a 1 to 3 risk to reward. Your take profit always stays on the negative 27. Now we're going to wait until we get tapped inside of this trade. As you can see right now, we have entered this trade. Our stop loss has not been hit because we are protected by this structural low right here. That is why I didn't leave it on the 88 and I put it on the 100 level. As soon as price breaks and close above the 38 level, I can now move my stop loss to break even and it becomes a risk-free trade. Only thing we're waiting now is our take profit to get hit. And as you can see, our take profit has been smashed. So this was the 1 to 3 on the Australian dollar versus the Japanese yen. If you want to learn the strategy, click the link in the description to get the course. Peace.